The South China Morning Post reporting that Chinese President Xi Jinping is scheduled to meet the top U.S. delegation on Friday to strike a trade deal. And obviously, if this is true, it seems like it'd be a real goodwill sign that this is going to be, I don't know, maybe not solved exactly, but some sort of truce.
Yeah, big if true, as they say on media Twitter. But it is amazing to me. I mean, what struck me today was this is all it takes to make everyone so excited and optimistic, because you said, oh, Xi Jinping is going to meet with the delegation. Well, he isn't going to meet with Trump as of now. Trump has said, oh, you know, they've asked him, are you going to meet with Xi Jinping again by the end of March? He said no. And
I think
all
that's
he said
why
was,
this is a big deal, though, right? This is the president going and meeting with two people that we have over there that aren't even the president. He's kind of like, all right, I will actually go meet Lighthizer and Mnuchin. I don't even have to wait to meet your president.
Yeah, I just mean the point I'm making is it doesn't appear to take much to get everyone jazzed and juiced and get the market going on optimistic notes. I mean, the other thing we heard today was Trump was saying, oh, I'm willing to extend that deadline, but then he also said, I prefer not to, though. But even that, saying, I'd be willing to, his actual quote was, let it slide a little while. Let that March 1 deadline slide. Everyone said, all right, off to the races. Now, maybe we'll get a deal, maybe, but I feel like we've heard this before, where optimism about a trade deal, we've seen this cycle play out like 2 or 3 times now, where we're here at the end of the day saying, oh, stock's up on optimism of a trade deal, and then nothing happens and we kick the can down the road a little further. So we'll see, we'll see.
I mean, I think given what happened yesterday in the market, right, the S&P retaking its 200-day moving average for the first time in quite a while. We had the highest percentage of stocks in the market yesterday making new highs since December 3rd. So not only did we have the overall index closing at its highest level on Tuesday since December 3rd, we had the most number of stocks making new highs since December 3rd. We also had, again, we mentioned that big technical accomplishment for the S&P getting back above the 200-day.
Yeah.
And so I think, to kind of jump off Dan's point a little bit, you know, we're really torturing the incremental positives, I think, on trade and the shutdown, and you can kind of feel it happening, you know, through each show over the last week, where the market is grinding higher, because I think the market right now, the internal momentum in the market is looking a lot more constructive than it's been in quite some time, and I think we continue to see a lot of encouraging signs in the market internals. And yes, there is some positive news on trade and on the shutdown and all of that, but you begin to start to feel like you're just shouting into the wind on, is this good? Is this bad? Because right now, I think the stock market is looking at, well, we're not going into recession, so how much of that correction do we need to make up? Right now, the answer is quite a bit, and probably even more.
So let's get into some of those internals then. Let's say, forget it, that what's happened the last 2 days, although I think it's harder to say yesterday, but what's happening today actually is not a macro issue. This isn't China, this isn't trade, it's something different in the market. Is it fundamentals here? Is it inflation data? Like, what would lead us to continue to go higher here, as you said, after breaking through the 200-day moving average?
Well, there's been a lot of nice green in tech, let me just say first. I mean, and we used to always say, oh, when the FANG stocks are doing well, that's good for the rest of the market. And then we saw that for so long they weren't doing well. But if you look at all the names that we often talk about today, they're all nicely in the green, 3%. Twitter, even Snap, 3%. So that helps. That's a start.
I got some 52-week highs for you. You want to know?
Play the hits. Play the hits.
I play the hits. You ready? I'm juggling some things here. Diageo. Thought that was it. Dollar General, Kinder Morgan, Red Hat, Fastenal, and Splunk. A nice variety for you. I know
Myles.
You had a chart of the day on Fastenal, sort of how important that is as a predictor for the economy. But with you know, Dollar General in there, looking at that chart, Red Hat, you know, coming in. Well, IBM. God, we beat up IBM for buying Red Hat. We were like, IBM, what are you people thinking? There it is, $180.
As we like to say here on the show, Jen, that's a nice looking group of 52-week highs there.
Thank you. I came up with it all by myself.
I just think, again, like the market just starts to look better overall. And we showed that longer term chart, that 6-month chart, right? We are still about 100 points or so in the S&P, a little more than 100 points away from the all-time high. And so, yeah, we're kind of back to that triple top level that we discussed a number of times as we came down in October, you know, October, November, December, right? And we can really see the 3 peaks there, mid-October, mid-November, and then right at the turn of December. And I think once we get back to that level, it's another one of these big technical battles. But, you know, to go back to the first part of the discussion, it's like we priced in a full recession, and it's pretty clear that the U.S. economy is not entering recession imminently, at least as far as all the data that I'm looking at, and, you know, pretty much everyone on Wall Street. So, you know, it's not like it's only my take, right? Most people don't think we're entering recession, and I think that's what the market is ultimately responding to.